It's a big upgrade for a Josh Brown favorite. Rahel Solomon has those details. Hey, Rahel.
Hi, Scott. Yeah, so this is a long-term growth play. Shake Shack was already a growth story pre-COVID, but Wedbush saying that it's even more attractive post-COVID. So part of the reason they're upgrading Shake Shack to outperform from neutral and raising the price target to $77 from $53. So analysts, Scott, like the digital investments that management has been making, they believe that the initial company forecast of 450 stores by 2027, they say that's now conservative. So the company is now rolling out these Shack Tracks. This is a rendering where you can walk up and pick up an order or use a drive-through. So Wedbush expects that this new model to add about 4 or 5 years of outsized growth. And speaking of growth, Shake Shack just opened its first location in Beijing. Take a look at this line. About 200 people waited in line for it to open its store. So, Scott, apparently demand is very strong. It is not just Josh Brown.
Yeah, no doubt about that. Rahel, thank you. Josh, look, we discussed the position you have in this stock a week or so ago, and how you mentioned, obviously the pandemic has been very difficult for this company. But what do you make of the call in the context of all of that?
Yeah, I mean, this is undoubtedly one of the big losers in its category from the pandemic. And a lot of the reason for that is the model of how they've opened up stores. They've looked for high foot traffic places in tourist locations. And there's obviously none of that happening right now. And that won't return until there's a vaccine and a general reopening. So that's why this stock had been punished and continues to stay down. I would still point out investors are giving it the benefit of the doubt. It's still 150 times earnings or whatever it is. So it's not cheap. But what I would say is a lot of the things they had to do long term anyway have been accelerated. So the tech spend, the app spend, all of that is working. And they had to do it in the long run anyway, because that's what all the best companies in this sector have done. And drive-thrus, which we won't see any until 2021, but they're accelerating that, and many of the stores will be drive-thrus. So, look, you have to be patient, and this depends on what kind of investor you are. If you're someone that wants to be in what's working right now, you're not in Shake Shack, you're in Chipotle, because all of the things Shack has to invest in now, Chipotle already has done. So if that's what you're looking for, that's the kind of stock you're in. But if you're patient, you recognize this is a $2.3 billion enterprise value. They could have 450 locations, and that could be conservative. They could have more. So that's the way I look at it. I'm in it. I'm not expecting big things. If the analyst is right and it gets to 77, I'll be very happy. But that's not my current expectation for the next 12 months.